I think that's really at the center of what the market's trying to calibrate right now. We've gotten to a point where we've adjusted our estimates for things like earnings and economic data pretty quickly, too. So, we look at the earnings reporting season and say, we used to think the first quarter is going to be plus 10%. Now we think it's going to be minus 6%. Second quarter could be as low as minus 15% GDP growth. All that has been adjusted. But the other end of this is, okay, we're starting to see new cases peak. And what does that mean for the duration of this pandemic? And I think Jamie Dimon is much closer to reality in terms of both. It's not going to be May, and it's certainly going to happen incrementally. We're going to find a safe way to get people to get back into the workplace, likely over the course of the summer. So, much like China got back in increments, they went from being, 20% of capacity utilization to 85% where they stand today. But that took 3 months. I think we're going to be in the same place.
All right. Do us a favor, Art. You've been covering markets for quite some time now. That's no commentary on your age. But put for perspective for us here, how difficult has forecasting this coming quarter or quarters, how difficult is this now versus any other time in your career?
This is probably going to be the craziest of the earnings seasons that we've seen, at least in my career. And only because of three things. We have to ascertain just how much of the first quarter was adversely affected by the slowdown. And there were some supply chain issues that fell into the middle of that. The second piece of this puzzle is when you give guidance, does anybody expect you to actually have a pretty good handle on what the back half of this year looks like? And I don't think that that's the case. So I would suspect that we're going to have about half of the S&P 500 just literally pull their guidance for the balance this year. And I think that's going to be acceptable. So in a sense, it's, we've got one of the craziest earnings seasons coming up. And I think investors kind of look through that and start looking at things like they have been over the last couple of weeks, which is really, where are new cases peaking? How does Germany look? How does Spain look? Are we doing better in New York City? And reacting to that much more than they're going to be reacting to some of the guidance.
So Art, they always say that the prevailing wisdom, conventional wisdom, is investors hate uncertainty, but they do climb walls of worry. You throw whatever cliche you want in there. Why is the market so constructive right now, given the fact that there is all of this uncertainty out there?
Well, I think it's just that. I think the market is focusing on the fact that at some point in time, this pandemic is going to come to an end. That's evidenced by the fact that we're seeing a plateauing of new case discovery in many parts of Europe right now. In New York City, which is largely the epicenter for the United States right now, it is our hottest spot, is actually coming to a peak or an apex in their new case discovery as well. That is going to be the catalyst for markets right now. They're going to focus on that much more than the fact that we've lost 15,000 jobs over the last 3 weeks. And I think the reason for that is we don't know what the other side of this looks like until we get to the top of the mountain.